Good morning, everybody. How are you all doing? Morning, Paul. Outro. Welcome to the private streams. Didn't that come up on Friday? Seems to be notifying me that people have joined the private streams pretty much every day for some reason. That's weird. Anyway, hello, Outro. Morning, Barry Man. Morning, Sarah. How are you doing? So, market's about to open. In fact, market has just opened. A little bit of a gap down on the DAX at the open. Right, so no pre-market trade on the FTSE. Pre-market range too small today. DAX doesn't even appear to be moving. So taking a break of the pre-market 5-minute candle today, but no movement. Interesting. Morning, John. Morning, Steve. How are we doing? Right, so this week is a pretty normal week. So nothing particularly exciting going on today. It's a bank holiday in France today, and Canada, and the US. Okay, so be careful trading the US session this afternoon. We have a bank holiday. Veterans Day today. So the US session this afternoon is going to be fairly light. In fact, all sessions today will probably be fairly light, which is probably why we've not got an awful lot of movement on the DAX this morning. FTSE's off to the highs, look. We are just testing the previous day's low on the FTSE. So just retesting this propulsion move from Friday at the moment. So we might run into a little bit of resistance there. No trade on the DAX yet, though. Still nothing. Not moving. So, yeah, be careful this afternoon. I'll have a look at the market this afternoon. I might not trade this afternoon. Morning, Virginia. So, we'll start with the news. So, this week's live streams. Monday, obviously, we just do what's coming up this week. Trade the FTSE, trade the DAX, do an analysis of the FX pairs, etc. Tomorrow's member stream, we are doing daily strategies. So I've got a list of daily strategies that I want to test out, which are old strategies, basically, that still work, basically. So I just wanted to automate them and do some proper back testing on them. So tomorrow we're going to be doing some back testing on daily strategies. Basically, a daily strategy is just something that takes one trade a day. Yeah, very simple. We've got 3 running already that we've actually, I should say. So for those that have been in the member streams, we've obviously got a couple of strategies we've been testing. I've set those live today. So, or rather on Friday. So that's the normal position trader. No, it's not. Position trader EA account. That one. That's my normal account. I've set the pullback strategy, the trend-based pullback strategy for the yen pairs and the Swiss pairs. I've set that live on Friday, so that will start trading this evening. The lazy trader strategy will start trading this evening. And that 2-hour Asian pullback strategy, which I haven't come up with a name for yet. No, it's not. It's a scalping strategy, basically. Just trades and then gets out 2 hours later, which one of the members came across. I've set that live as well. So I'm going to live forward test this one. It's only running at the moment on the US dollar CAD. I'm going to set some more pairs up for that to trade today. I need to do some more back testing on it today. But I'm going to set that running and see how that trades. I've got a feeling that's going to struggle with spreads and things, but want to live test that one. So some of the strategies we've been working on the member streams are actually going live today. But we're going to work on some more tomorrow. And look at some and test some, see if they're any good. If they're good, we'll develop them further. If they're crap, we'll throw them away. So Wednesday, midweek analysis as usual. We'll be trading the Dow and the NASDAQ because it's an afternoon session for the US. And then Thursday, we've got another members stream, which is going to be pretty much the same sort of stuff. We're going to be developing more of these daily strategies. I've got loads of them, so we'll be working on them. And then Friday, the normal Q&A as usual. So we'll kick off with the news today. Not a lot going on over the weekend. As you can see, scrolling through, there's nothing red. Trump has started talking. So we have to be aware of the Trump effect now. When he talks, the market tends to move. So nothing much happened over the weekend, but obviously Trump was speaking, so be careful. Apart from that, not an awful lot happened over this weekend. Trump is starting to make noise about what he's planning to do with the Ukraine situation when he gets in. So that might have an impact on the markets when we know exactly what his thoughts are on that. We don't know fully yet, but anyway. But yeah, apart from that, nothing else over the weekend. Awful lot of stuff coming out of the Bank of Japan. We had a really big day on the yen on Friday. So we had, as you can see, Thursday, Friday, basically. We had some big moves. So there is a 217 pip move there. ADR is 188. So we had lots of yen movement again on Friday. Huge one there on the euro yen. That was 221. So if you took any of these ADR reversals on Friday, you're out of them now. We've had an ADR hit back to the upside on the euro yen, New Zealand yen also. So big moves on the yen, but nothing particularly exciting mentioned really over the weekend. Morning, Harold. One of that strategy that you sent me is one of the ones we'll look at as well tomorrow rather. So coming up this week, today's bank holiday. New Zealand inflation expectations came out at 2.12, so they are forecasting a bounce on the New Zealand CPI, which means that there's a possibility they may want to start freezing rates. I think everybody's in the same boat now. I think we've all done the big drop on the rates, and we're all now looking at seeing what's happening. Targets are pretty much hit, so it's a case of sitting there really with inflation now and interest rates and seeing what happens. So fluctuations on interest rates, I think we're just going to see 0.25% now, back to normal. Obviously interest rates are going to remain a lot higher than they were after COVID, so I think this is the new norm we're moving into now. We've got the claimant count for the pound tomorrow, which is an unemployment measure, so that could potentially move the pound, but the pound again is very stable at the moment. Other than that, there's nothing else on Tuesday. Wednesday is the main day. We've got CPI numbers, so this is your main focus for the week this week. CPI is expected to remain stable in the US. So as long as we get the numbers coming out stable there, we shouldn't see a massive move. If they come out bigger or smaller by a significant margin, obviously we'll get some more movement on the US. But I don't think we're going to get any shocks on inflation. It's coming down a little bit quicker than anticipated, I think, for the US. So if anything, it could overshoot. So we could see a 0.2 or a 0.1 on the monthlies, meaning weakness in the US. But we'll have to wait and see. Bullock is speaking overnight for Australia. Then we've got the unemployment rate, again, forecast to be stable. Aussie unemployment. PPI on Thursday afternoon. Again, probably not going to see much on the producer price index, which leads into CPI. So we'll see what happens. Powell and Bailey are both speaking on Thursday evening. But obviously, we've just gone through interest rates last week. So last week, we had the interest rate announcement for the Bank of England at 4.75 and the Fed fund rate 4.75. So both of them dropped from 5 to 4.75. They both had press conferences after those announcements. So what these two guys are going to say tomorrow, or rather on Thursday, unlikely to be anything different than what we saw last week. So obviously, we need to be aware that there may be some volatility coming on those. We got GDP for the pound on Friday, and we've got retail for the US on Friday as well. And again, retail figures pretty stable. So all the forecasts for all the news this week seems to be not expecting anything to have really changed. So there is an opportunity this week for obviously volatility if we get some of these which do change when the market's factored in no change. So, but it's pretty light week. That's really the main mover this week. But we have to see what the markets are now going to make with Trump on board, because when we had Trump in charge before, the news was obviously impactful. It always is. But the most impactful thing was the Trump tweet. So he will see numbers and say something without telling anybody, and that's what tends to move the market. So it's one of those weird situations we're in now, but he's not even in power yet. And as you can see from Financial Juice, the market is paying a lot of attention. So whenever he speaks, we're going to see Trump flying through here. So we've got to be a bit careful now. But at the end of the day, everything seems to have stabilized. If we look at all the US pairs, obviously this is the election, and we're basically kind of back to where we were before the election. So this was the day before the election. This is where we were. We're kind of back to where we were. So what we've seen is a complete whipsaw. Yeah, which is kind of what you expect on election time. Increased volatility, but no real reason to change direction, because nothing's actually changing necessarily, is it? We've got a new person going to be in charge, but at the end of the day, it doesn't really affect the fundamental bias until he says something or decides to change something. So pound US dollar very much in the middle of range. Euro US dollar, that one's dropped a little bit, not really recovered, but the euro's obviously weaker at the moment anyway. So yeah, everything else kind of back to normal. There we go. So that's your news. What we've got coming up this week. So everything's focused around Wednesday for the main volatility. Very light day today, I should expect. Not really any news tomorrow, so really we're going to kick off there, I think, next week. I'm totally flat at the moment. I've got no positions on whatsoever. So I'm waiting for some volatility, basically. So as you can see, ADRs at the moment, Euro Yen is extended to the upside. So if you drop down 5-minute reversal alert's already gone in there, look. So there's your switch. That was obviously an ADR on Friday. If you took this on Friday, you probably would have been in here. What's ADR on this? 117. Yeah, so that was 150. So you would have been in on an entry there on ADR reversal. You'd have been in on a second entry there at least. And you'd be out on that. So if you did get into that one on Friday, it was a lovely little reversal. And obviously now we've got a opportunity to go short. New Zealand yen, same thing. That one's already triggered a short as well. Not really going anywhere at the moment though. So we've got a new low put in, market structure shifted to the downside. We're still putting in a lower, or are we putting in a lower high there? It's a double top in it really. But so if that holds, excuse me, there, we should expect a new low to be put in. And the other extension we've got is the New Zealand dollar Swiss. So obviously New Zealand interest rate, inflation expectations came out overnight. This one isn't, I wouldn't really class as an ADR today because of this. Look, so whenever you see any ADRs on the New Zealand dollar, it's a very big gapper overnight. So it will gap a lot just normally, yeah. So that's where it closed, that's where it opened. You get big gaps on New Zealand because it's the first session of the week, first session of the day, etc. And there's no volatility in the market, so we tend to get these big spreads happening. So that one, obviously, that's where the market closed. We've opened down there, so it's a big gap down. So although it is an ADR hit to the upside, possibly it could be because of that candle. So kind of take that one with a bit of a pinch of salt today. RSIs, which is what I'm waiting for, there aren't any. So there's nothing to look at from an RSI perspective at all at the moment. Nothing's extended. Everything is sitting very nicely at the moment, around about the 30s, 40s and 50s. Nothing's getting extended at all. So this side of the dashboard is the 4-hour RSI 10. This side is the 1-hour RSI 21. Everything very, very, very neutral. There's not really anything getting close to getting extended at all. CAD Swiss, probably the closest. Potentially, I mean, that's miles away. US dollar Swiss is getting close-ish on the 4-hour. So, yeah. So what I've got set up at the moment on the VPS is kind of the set file that I put out in Discord, which is running on the hourly time frame. So what I've decided to do moving forward now is I'm going to try and get into some more positions a little bit looser. but running in line with swaps. So I'm going to be using the swap filter now. So for example, here I'm only going long on US dollar Swiss. I won't take any shorts on it. It's just too expensive to trade. All the time we've got these big interest rate differentials running now. It's time to start paying attention to them because of the amount of money they're costing me. So the average position trade that doesn't work out within 24 hours, which is most of them, is somewhere between 2 to 4 trades in a position, and tends to last anything from sort of 3-4 days up to a week or two. Yeah, the bigger, longer swings that we have to trade through can be weeks. Yeah, those are the ones which are costing too much money with swaps. Yeah, so anything that's playing out within a week or so, which is a lot of the positions, sort of 60-70% of trades and positions are done within a week, 2 weeks maximum. So they're no problem. It's the big ones that are costing the money. US dollar CAD, for example. Yeah, so the shorts that I had on the US dollar CAD, I'm paying 960 swaps on it. It's just too expensive to trade. So again, longs only on US dollar CAD for me. So I've set the EA up on the VPS now using the swap filter, and I'm using hourly RSI 21s to get in. So I will be taking 70-30 levels on hourly, and basically I'm trading on the hourly time frame as well. So it's a little bit of a I'm not using multi-time frame analysis to get in. I'm just loosening the reins, if you like, a little bit. So I'm saying I'll use the 70-30 levels because we're getting a lot of this at the minute. But I want it to be pushed up above those levels long enough that I can get a signal on the hourly time frame to get in. Yeah, so in effect, I will probably, it either needs to be extended and embedded above the 70, or it needs to be above the 80 in real terms, because I'm not using low time frames to get in. I'm using the hourly time frame. So but it doesn't really matter how you get in, does it? We know that. It's how you get out. That's how you make the money. Get in on a coin flip if you want, but I want the market to be extended before I get in. So so that's what I've got running, and obviously there's no positions on at the moment because there's no volatility. There we go. So we'll go whiz through all the pairs today. If there's any pairs specifically you want to look at, shout. US dollar CAD hasn't really retraced. No, not yet. Not yet. So it's retraced this leg. So obviously this leg, no, it hasn't. This is the thing. Are we going to retrace that leg? Hard to tell at the moment, isn't it? The market's basically reset here. So there's no market structure in play here, basically. So obviously there's no pullback happened on this leg. So what it's done is it's gone into accumulation. Now we're in accumulation. We can either break north or south. One of those two things is going to happen. So you have to wait and see where it goes. But the volatility that we've had last week on the election, obviously, you can see the normal daily range is something like that. That is the ranges we're seeing at the moment, obviously based on the election. Now we're going back after Friday. We had a fairly big day. Today is bank holiday. So I suspect today we're going to be returning back to these sorts of normal ranges. So are we going to now, we have that structure break in place, put in a lower high and go short? Or is the market just going to accumulate up here and sit around and wait? We'll have to wait and see. So news this week is going to play quite a big part in that one, obviously, in all the US pairs. That CPI and that PPI number this week, if they all come out as lower than forecast, we're going to be dropping the rates again. Which we are anticipating doing anyway. So if you're still in, you need to be looking for short, for lower than expected forecast on the news, ideally. But yeah, don't know if they are going to retrace that leg. You would expect them to. There's still an awful lot of long positions, but you know, if I was in a institution, this move here that we saw the day before the election, which was a very big sell-off. Yeah, you know, sort of if you look at the average ranges, we had 60 odd pips. We did a 150 or more ADR move the day before the election. That here from, so that gap down that we saw there, and then that 2-day sell-off, that is the market exiting ahead of the election because they didn't know what was going to happen. They haven't had to take all that off, which means there's still a lot of long positions on. Yeah, so there's still a big profit-taking opportunity there. But if the market just rallies, there's no reason for them to take it off, is there? So we'll wait and see. So if you didn't have aggressive drawdown control positions on, you'd probably still be in this. You should have been out on quite a fair old big chunk of that there. I mean, you had a lot of pullback there on aggressive drawdown control positions to exit. So, but it's a tricky one. We'll wait and see. If you look at all the other US pairs, US dollar Swiss is rallying. That's probably Swiss franc weakness though. Euro US very much down. So US strength. Aussie US coming back down. So it does look like there's US strength coming in at the moment. But whether it holds or not, you know, just because it's moving down that day doesn't mean it's not going to move back up again that day. Yeah, look at the range that we're in at the moment, and the volatility is just sideways at the minute. No direction. Morning JC, morning CK. How are we all doing? Right, so going to whiz through the pairs today. So just also just to let you know what I'm doing. I'm not trading any yen pairs with not position trading any yen pairs. So the position trader, let me just, where is it? It's that one. Yeah. So with the position trader EA, probably can't see, it's down there. Those are the pairs that I'm trading. So basically I'm trading all the Aussie, Euro, Pound, US, CAD swaps, pairs basically. I'm not trading any Swiss franc pairs. I'm not trading any yen pairs at all with the position trader EA at the moment. So those pairs have been replaced by this strategy, which is the pullback strategy. So this is a trend pullback strategy basically, which is only trading the Swiss and the yens. So all yens and Swiss I'm doing with that strategy now. Testing it basically to see how it works. So personally, I've decided not to trade any yen or Swiss for the moment. Same as I've been doing for the last 6 weeks or so. Basically, since the intervention, I'm not trading, as you know, any Swiss or yen pairs since the intervention hit, which is actually a long time ago now. Look, 1, 2, 3. That was 4 months ago, the intervention. That's a long time ago. It's nearly half a year. So yeah, I haven't been trading any yens since then. I took one trade on 1 yen and it was a squeezy one. So no, just not interested. But long only, really, if you are going to trade the yen, I wouldn't be interested in shorting the yen at the minute, just because of the cost involved in it. So, and the same with the Swiss. If you look at all the CAD Swiss pair, the Euro Swiss pair, yeah, swap long. It's a carry trade basically, but the Swiss will do what the hell the Swiss wants to do. So at the moment, the Swiss is doing virtually nothing. It's very, 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 very sideways, as you can see. So it's great for, if you can get RSI extension 70-30 levels on the hourly. That's probably the best way to be getting into this thing at the minute. But as we know, they will manipulate the Swiss whenever they want to. So I've decided to take both of those out, which I've had out for, you know, the last quarter. I haven't been trading them. So we'll see what happens. So I've replaced those pairs with a stop loss based pullback strategy, which we've been covering in the member streams. So I will forward test that and we'll see how that goes. Right. So Swissies, I'll cover all the Swissies and the yens first of all. Morning, Mark. So the yens, obviously, at the minute, we don't know what to do with them. Neither does the market at the moment. So obviously, with what's happened now with interest rates, the Japanese interest rate is now positive for the first time in a couple of decades. So the old carry trade that we've always been used to with the yen, which is why the yen's always been a massive trender, potentially should still be there. There's no reason why it shouldn't continue to do that, because the interest rate differential is so big still that it makes sense for the market to continue to long it. However, this intervention really kicked the market. Was not expecting it. Well, was expecting it, but wasn't expecting it in that magnitude, I don't think. So the market's kind of still sitting there in shock for the last month. We basically unraveled part of it. Looked like it wanted to continue, wasn't able to. Since then, we're sitting around. Yeah, so there's very little directional bias you can call on these yen pairs at the moment. They're great for range high-low bounces, which seem to be all it's doing at the moment, wanting to stay range bound. So any ADR hits around about monthly, weekly levels, probably not bad opportunities for longs and shorts, but that's pretty much it. I wouldn't want to position trade it. Longs, potentially I might do, but we don't know whether or not the Japanese are going to continue to buy the yen and keep it propped up or not. If they're not going to do that, long trades will work out very well. If they are going to do that, we're just going to stay range bound. So it's very difficult to call any of these yens at the moment. As you can see, it's rangy at the minute. So it's not really going anywhere, which from a position trading perspective is great, because obviously any extensions you get, likelihood is it's not going to continue. Therefore, you're going to make money on it. So all the shorts at the moment, and haven't really had many longs here, but you had little possible opportunities. I mean, I wouldn't have got into those. I would have got into that. And that definitely, maybe that. But yeah, that's really all we're doing. And we're kind of doing this staged like approach where we are moving up and sitting around, moving up, sitting around. And this tends to be caused by news in the cross. So when the Canadian has some good news, it'll push up and then it'll just go back into this thing again. Yeah. So if we get any bad news on the Canadian, if the oil price collapses or they decide to get a massive inflation bounce or something, obviously we're going to go probably do that. So it seems at the moment the yen, although we're getting a lot of ADR movement, it's not really going anywhere. It's moving intraday a lot, but not actually directional. So all of these, basically, your guess is as good as mine on them. We just don't know what the monetary policy for the Japanese now is. They are using interest rates to control inflation more. We could well see interest rates on the yen within the next 6 to 12 months being up towards the 1% mark, which means the good old carry trade isn't as good as it used to be. Therefore, this thing can move much more independently. It could become just a normal major cross again, but who knows? So it's just very, very hard to call at the moment. Technically, it's operating very nicely as you would expect. It's using support and resistance bounces very nicely. It's ranging very nicely. So any RSI extensions on it will continue to work out as long as the fundamentals support that. But we just don't know if they're suddenly going to stick another whacking great intervention move in. Don't forget, with the yen pairs at the moment, we are very much over that 150 magic line in the sand that the Japanese like to keep the US dollar yen within. We're above it. We can't really get any further much at the moment, but we are above it. So what's going to happen with the US dollar? That's the thing, isn't it, really? So I'm steering clear at the minute. But intraday, nothing wrong with trading it intraday. If we get a push up 150 ADR or so, you can take a little quick short play like that, but I wouldn't want to hold it for long. So any long signals, like I say, we had a lovely long signal on Friday, played out beautifully. Swaps are good to go long, they're not good to go short. So that is something was worth getting into. But it's always worrying when we get this massive strong movement in the yen as to whether it's going to continue or not. Is it part of a intervention move or not? It's just always worrying with the yen at the minute. So stuck sideways, I'm really just not interested in playing with it. But as you can see, range highs and lows, that's all you're interested in. Morning, Roger, how are we doing? Aussie dollar Swiss. So all the Swiss pairs, I'm going to run through these as well because I'm not position trading these at the moment. But the Swiss basically is very much in the same sort of situation. If you look at it on a higher time frame, we are really not going anywhere at the moment with the Swiss franc pairs. The Swiss franc and the yen move together. So when you get the intervention on the yen, we got that massive move on the Swiss franc. They're both safe haven currencies. They tend to be places you put your money when there's trouble. Again, with the election, we saw some fairly big moves on the Swissy because they were taking money out of the US dollar, needed to put it somewhere while we're waiting to see what happens with the election. So, but we are stuck really range bound at the moment. So we just last week we put in a slightly higher weekly high. We put in a slightly lower weekly low. It's just not really doing anything, is it? So we're sitting around at the moment. You had a lovely RSI extension on the 4 hour for a short, but again, just be careful of the cost of trading this at the minute. So lots of intraday movement, no real direction. So CAD Swiss, very much the same. Yeah, if you look at all these Swiss charts, it's just not doing anything at the minute. We've got Jordan spoke last week, didn't really say anything. What have we got coming up Swiss this week? Anything? Nothing. So yeah, there's just no news basically to drive this anywhere at the moment. Therefore, it's obviously not being driven. It's just dead. So neutral. So anything you're trading on the Swiss at the moment is going to move based on the cross. So you want to be watching the crosses news for direction on it, basically. But if it's going to stay like this, you know, like with the CAD Swiss, for example, it's very obvious what to do, isn't it? You're just waiting for pushes up into these highs. Yeah, and obviously you got these lows at the minute. So anywhere down there is a buy. Anywhere up here is a sell at the moment. So if it continues to push and we get an ADR hit on that today, short it. You got some backups coming up here. But obviously, if you're shorting it and it decides, nah, we're going to run from here, don't forget, when you're in a range, you're going to get a breakout. If the breakout is not a failed breakout, it's going to turn into a trend. That's what breakouts are. They're starts of trends. So if it does start to trend, sod's law, it's always the one that you get into a position trade on. So I don't mind going long with a position trade on this. And then we'd be looking to trade it back down into this area with a couple of positions because they're going to pay me to trade it. I do not want to be getting in that way at the moment with a position trade. With a stop loss, no problem. Because if this range is going to hold, it's going to hold. If it's not going to hold, just don't want to be in it. So so all these, all the Swiss is all pretty much the same at the moment. Look, Euro Swiss, look at this contracted range. So we've got a monthly range within the previous month. So that is an inside bar on the monthly time frame. Yeah, which is indecision. Yeah. So you did the price action reading part of the members streams. Yeah. Absolute textbook indecision on the monthly time frame. We're in a new month, which started here. Yeah. All that news last week, we didn't go anywhere. So we are totally stuck at the moment. So range highs and lows at the minute on all the Swiss pairs, good opportunities, but not the sort of thing I'd want to get in long term on. So, you know, if you're going to trade this type of thing, some of these daily strategies that we're going to look at, very few daily strategies that are successful and work use a stop loss. Yeah. So when you get in on a daily strategy, the idea is you are setting an entry and you see what happens. So let the market muck about and do what it does intraday. This is a 4 hour chart, which obviously doesn't make sense what I'm drawing, but you know, let it move around and then look at the end of the day what actually happens, because you're going to get lots of intraday movement. But if you're getting in and then that day closes bearish, then you can put a stop loss in place. But don't use a stop loss just because you've got an entry. Yeah. If it pushes up, you can close it up there. That's no problem, is it? Yeah. Risk, reward, and stops, as we know, if you've been watching me for any length of time, just doesn't work. Yeah. So nothing wrong with getting out your trades. Just don't use a hard order to get out. Just get out if you don't like it, if it hasn't done what you expect it. So something like this pound Swiss today, if we get an ADR hit today, short it. Yeah. Give it the day. Maybe have a look at it tomorrow morning. Is it lower than your entry price? Yes. Then decide, all right, well, I'll stick a break even on it, or maybe I'll put a stop above the high, or maybe I'll just take it off. But if you get in short here and place a stop loss above that high, and intraday it does that, all you're going to do is get stopped out. Yeah, absolutely pointless. So again, pound Swiss, same thing. New Zealand Swiss, a little bit more movement on the New Zealand Swiss, but you know, not really. Monthly high, monthly low, monthly high, monthly low. So if you put these 2 months together, what have we done? Nothing. Sitting around doing nothing, aren't we? So again, market just in shock from the intervention from the yen. And there's not really a lot you can do with the Swiss pairs apart from look for range bound trades. US dollar yen is kind of the exception, obviously, because the US dollar is going to always have more volatility. It's always going to move a lot more because it has news constantly. Yeah, I put this fundamental spread. Somebody asked me about this because I showed this on Friday. I'm not using my fundamental website anymore. I'm basically spending 100 odd quid on scripts and things and hosting, blah blah blah, whatever, a month. Not even a month, actually, less than that. But I'm spending $1,000 or so running a website which is just pointless. I might as well just run a Google spreadsheet and update it every day, and this is basically what that is. So it's just all the fundamentals. So I've set this up basically, and as you can see, this bottom row, that's the US dollar news. Yeah, so the US dollar moves a hell of a lot more than everything else. It has a lot more news, and news moves the market, right? So that's basically all this is. I'm just keeping track of the news basically so that I can see what's going on with it, and instantly see where the interest rates are, inflation, all that sort of stuff. So yeah, this obviously is just going to move a lot more. So the New Zealand dollar Swiss, you're going to get more movement on it. Again, better to trade long than short. As with all Swiss pairs, because the Swiss interest rate is so low, therefore the differential between the other currencies is so high. Therefore, if you're trading it short, it's going to cost you a fortune. So at the moment, yeah, happy to trade longs on it. But is the US dollar going long? We don't know. We've got very little knowledge as to what is going to happen. Last time Trump got in, great for the economy. Economy is great for the US dollar rally. Stock markets rally. Everything rally. Brilliant. Is that going to be the case this time round? We're in a very, very different world. Yeah. Last time Trump was in, he was telling us to inject bleach during the pandemic. He hasn't been in power since the pandemic. This market is 100% different to what it was before the pandemic. So is the Trump effect even going to work? We just don't know. So there's too many unknowns at the moment. So just trade what you see basically with everything at the minute. It liked it, therefore it looks like it's going to start to trend up. So you could look for trend pullback plays. So again, the strategy that I've got running at the moment on another account is basically looking for these days. This is a 4-hour chart. Again, let's go back to something we can see daily price action on. So that strategy would have been in long there. Yeah. So it would have been looking to get into a long entry somewhere around there today. We didn't get there, therefore that trade won't happen. It will cancel it off and it will look at this day's price action and it's going to look for pullbacks. Yeah. So the trend strategy that I'm running will just be getting into this every day. As long as it's doing what it should do in a trend, which is create market structure, it will just continuously keep buying these dips and we'll keep making money out of these Swiss and yen pairs if they trend. But they're only going to trend at the moment because they're being neutral if that thing moves the market, which is the US dollar at the minute. Morning, FTNet. How are we doing? Right, so those are all your Swissies and all your yens. As I say, they're all very, very, very sideways at the minute, but it's, you know, it's not unusual for them to do that. So at some point they will break out of these ranges, and at that point, if you've got a position on and you're the wrong way on it, that's when it tends to get painful. So we've got plenty of other things we can trade. So looking at the Aussies, so Australian interest rates currently 4.35, unchanged. They have still said nothing about changing these interest rates either. We don't know what's happening with the interest rates on the Aussie. Well, we do, they're not moving. Inflation pretty much hitting target. So I would expect the Australians to come out shortly and say we are going to be dropping those interest rates, which means that we should see some bearish price action starting to come in on the Australian dollar. At the moment, though, it's not happening. So again, you can see this is very range bound. We had an extension opportunity on the news with Trump for a short, which worked. We had a long prior Trump, which worked. But obviously, these extensions here are the Trump effect. So, you know, if you took them, great. They worked out beautifully. But if you took them, you were taking very high risk over an incredibly volatile news event, which is fine, up to you. But I stayed flat. So yeah, looking to get into some volatility on this at the moment. Trading in either direction at the moment on the Aussie. Just waiting for some volatility to kick in, really, so that we can get some entries. Very few signals on it. We had a nice little long there, little bit of a long there. Yeah, just waiting for some volatility to come in, basically. As you can see, we've had this massive whipsaw last week with the US elections. So everything's kind of returned back to normal now. So we've reset. Yeah, and this is the reason I stayed out last week and got as flat as I could, as fast as I could, because this is quite normal. However, after the elections, you tend to find the US dollar takes off in one direction or the other. Usually pretty orderly, but does tend to take off. So we're just waiting to see which direction the market's going to go. The Canadian dollar is linked to the US dollar, so whichever way the US dollar goes, the CAD tends to go with it. If they're going to drop interest rates in Australia, that's more likely what we're going to see, and you can see that's starting to kind of kick in at the moment. So I'd be more interested in shorts on this than longs, but I'll take anything. It just need a signal on it. So at the moment, you've got this new wide weekly range put in. So everything this week really is going to be an inside bar on last week, because you know, we had such a big range put in. It's a case of seeing what happens when we test one of these levels. So any ADR hits or RSI extensions, which we're getting close to these levels, decent opportunities to start testing the market. But we haven't gone anywhere at the moment, so stuck sideways. Aussie, New Zealand, again, another sideways bound one. Did I take the Aussie, New Zealand off? I think I left it on. I was toying with the idea of not trading Aussie, New Zealand. No, I left it on. I did leave it on. Yeah. So I am going to be trading Aussie, New Zealand. What I'm worried about with this pair specifically is when those interest rates start to come down on the Australian, we may well get into a trend. If you look at the Aussie, New Zealand, it's prone to these parabolic trends. And they're usually caused by interest rate differentials and interest rate changes. We haven't had one for 18 months, I think, on the Australian now, maybe even longer. So when we get that first interest rate change, there's a good chance the market's going to react quite quickly to it. However, it's not forecast, so that's why we're kind of sitting around at the moment. So there is a danger of this one getting a little bit parabolic. Hence me now using the swap filter. If that parabolic move is like that, I'll be in on it short, but I won't be in on it long. Yeah. So because it's just going to cost too much money. So what I'm hoping for is some signals to the upside and a little push up into these previous monthly highs to try and in fact that's high of the year, try and get some shorts on. But as you can see at the moment, we've got quite a big down day on Friday. So absolutely nothing today. Look at this. Worst price action on the planet. Can't do anything with it at the minute. So looking for a push up, ideally, so I can start getting some shorts on. So any extensions to the upside would be nice. But right now, not really doing much. Sideways. Quite decent moves on news. The interest rate differentials and the interest rate changes that we've had from the New Zealand dollar are moving it nicely. But you know, we haven't gone anywhere for the last sort of 5 weeks or so, 6 weeks. So we're just sitting around at the minute. There was an RSI extension to the upside there. Very weak, thin price action. So you may or may not have got into it. If you are, you're probably still sitting in it, but you're in profit. So we had a long down there as well, but not really a lot happening. Aussie US got out of that one last week ahead of the elections, so I wanted to get as flat as I could, so took about point, I don't know, it wasn't a lot of profit on that one. Aggressive to get out, and obviously volatility's come in over the election, and we are kind of back to where we started. So again, we've got this whacking great weekly range put in, which is just additional volatility that's gone in over the elections. We haven't gone anywhere. We're back to where we were. So it's a case of now, where do you think we're going to go US? We don't know. So it's just a case of sitting around and waiting to see what happens. I doubt very much whether the US will go into a strong trend ahead of Christmas, but we do get the Santa rally. So there is a chance that we may. Don't know. We'll have to wait and see. But right now, I'll trade the Aussie US in any direction. Just want it to move somewhere. So we're kind of reset on all the RSIs at the moment. So whichever way we go this week, I shall probably get an opportunity to get into a long or a short. Again, these weekly highs, it's difficult to know whether there's going to be any limit orders set at these levels, because these aren't support resistance levels. These are just levels created by the volatility around the election. So I don't necessarily think there's going to be a strong support or resistance at them in the form of limit orders waiting for that price point to be hit so that they can add, because as you can see, that has all been undone. So 100% of that price action that was in this volatility is gone. Yeah, if you were short, you've had opportunities to get out your shorts. If you were long, you've had opportunities to exit your longs. So you're probably back to neutral, which is where we were before, sitting around waiting to see what happens with the election. So now with the other side of the election, it's a reset, isn't it? So we'll see where we go. Nothing there really to look at, but ADRs to the downside. You know, this looks like a monthly support bounce. It's not. It's just the election. This was trending very, very hard, obviously, to the downside. But as long as it's trending with market structure, it doesn't matter. We can always get out. So don't care which way that one goes. I'll just be looking for an opportunity to get in on any RSI extension we get. But as you can see, obviously, there's just no extensions at the minute. Canadians, yens, euros. So at the moment, Lagarde is very neutral about the euro. So the 3.4 interest rate, inflation is at target. Everything's kind of going where it should be going. It's all good. We've just still got these high interest rates. So I don't think necessarily we're going to get another drop on the euro this year. It may happen. But again, I'm only looking for shorts on this at the minute. It's just too expensive to take a long trade on. So I'm happy to go short because there's nothing bullish about the euro at the moment. There's nothing particularly bearish about it either, but anything that's neutral is going to get pushed around by the other currency. And at the moment, the Australians aren't doing anything with their interest rates. So this thing should continue to do what it's been doing for the last 3 months, which is flip-flop up and down. So any extensions I can get up here, I'll be getting in shorts on. So something like that, one of those. There was a long opportunity here, which you could well obviously still be in, and probably are. But yeah, so just flip-flopping around at the minute, looking for a way to get in. Euro CAD, same thing. Again, totally sideways. Euro totally neutral. So the Canadian dollar is what's going to drive this one. It's a beautiful support area right now for a long. Yeah, had a nice RSI extension that was on the news, obviously on the election. So, but yeah, looking really good at this level. It held last week in the election. So this area here, basically. But you know, this was all part of the election move, wasn't it? So as you can see, we didn't do anything. We have come back down and retested, and it looks like it might be looking to try and go short. So at the minute, this is a good area to start looking to buy this. You would have been in it, well, it depends if you were trading last week or not, but if you were trading last week, you'd have a long position on this one already. And it's pretty much at the same point right now that you would have got in last week. So there's a long opportunity on it at the moment from a technical perspective. Nice support area. If it breaks that, which is this area here, look. If it breaks that, that's kind of your next support to the downside. So we'd be looking for a sort of 400 ADR move to the downside. So quite a long way. Morning, Ismet. So yeah, if that does break out of that range, we'll be heading probably all the way down to there. So that's going to need some Canadian strength, which is going to need some US strength. So I'm looking for shorts on it. So I'd much rather we pull back up into these propulsions caused by the elections. And I'll be looking to get in short up there somewhere, which is easy enough to get into on the hourly. So just looking for, 2 or 3, 4 days worth of upside movement, and then I'll get an opportunity to get in short up there somewhere if it gets there. We'll cover that one. Euro pound, ADR is 49 on this. ADR is starting to pick up on the euro pound. We had obviously a lot of volatility come in around the pound. The interest rate change on the pound dropping. The first time we've managed to, well, not the first time it dropped, but we've actually managed to drop the interest rates on the pound, which was very reluctantly done by Bailey. I was saying the euro, Lagarde is very neutral at the moment. Bailey's kind of neutral to bullish, scared to death to drop those interest rates they are. It's taken a long time, and it's been very hard to get a drop in those interest rates on the pound. We'll have a look at the pound in a minute, but obviously it went a bit nuts. So yeah, at the minute, neutral really on this one. So again, I'll be looking to get into this ideally with shorts only. The last batches of longs that I had on this cost me a fortune to hold. They worked out nicely, but they just took forever. So I haven't got my previous trades on there, but just taking forever to get out of this at the moment. We're kind of basing down here. If you look at where we are from a longer term perspective, we've got this area of support coming up down here, which is very, very close. Let me draw it in. I drew it in last week. When we get to the New Zealand pairs, it will draw it back in again. But that's the sort of area we're looking at for support coming up, sort of all-time lows, if you like. It's well within an ADR to 200 ADR now. So if this comes out of this sort of double monthly low area and double weekly low area, this whole support zone here, if we get out of this into this area, this could be where the turning point comes. So very good looking long opportunity coming up down there. But again, it's going to cost a lot of money to trade it. So not something I'm going to get involved in at the moment. But it's kind of embedded down there at the moment anyway. So there's a chance it may pull up before it gets there, in which case then I'll be looking to get in shorts up in that propulsion area and take a short on it. But we'll see if it breaks today. It's not far away. And it's trying to break out of all these lows today. So we'll see if it pulls back up inside. It's obviously failing. So, but it's not far away. Really, really close. This big support zone at the lows here. If you look at it right zoomed out, if we go out to the weekly, yeah, this is where we are. This area here, this whole area. Yeah, going back to 2015. So for the last decade, we haven't gone below this level. Yeah, but we are sort of contracting down here. So if that does break, it's a lookout below job. The pound isn't that strong at the moment. We've just dropped interest rates, although Bailey is saying might not be doing another one. There's a 25% chance of a December rate cut. It's not a lot, is it? So I'd find it surprising if we broke that level. So I think it's a very good area to be buying. Investors will be watching this area closely for long-term buys. So I think there's going to be quite a lot of interest in buying down here if we can get down there. So it's a very key level to be watching this week because it's you know, within a couple of ADR. We can do this afternoon. We can do this today very easily. So just watch that level. Euro New Zealand, very much sideways at the moment. Again, be looking to get in on this one. We've got a lot of sideways price action, but some fairly decent market structure going in. So we're watching for new highs here. We just had a reversal alert going. So unfortunately, though, Euro is not really bullish at the moment. And neither is the New Zealand dollar. So I'll be looking for shorts on this at the minute. So hopefully this week, this reversal alert holds that we've had, and we can push back up, and I'll be looking to get in short up there somewhere, assuming that we are going to come and retest these lows. But market structure on this, obviously at the moment, very much bullish. Yeah, but fundamentally, there's no reason for the euro to be bullish. There's no reason for the New Zealand to be bullish either. So again, you kind of trade this one in either direction. Just watch your longs, because they are costing a lot of money at the moment. So it's a little bit limiting. I'm in two minds as to whether to do this as an amendment to the strategy, because it does cut half of my trades out. If you flick through all these pairs, there's always a good and a bad with most of them. There's the odd one where you get both good and you can trade in either direction with without any particular heavy financial cost. Not many of them though, but it's, there you go, there's one. So it doesn't matter if you go long or short, it's not particularly expensive to trade. But you know, I cannot ignore the fact that my trading results over the last year have been eaten away with, you know, more than $30,000 worth of swap fees. So removing that from the equation, those fees would instantly make me more profitable. However, it's the offset against the number of trades I won't be taking, because how much of that profit was generated by trades against the swap. But there was a lot of pain involved in those trades as well. So there's a psychological aspect to it of about sitting in drawdown for 3 weeks, watching the swap fees build and build and build, makes you more cautious about taking extra positions. If I can take trades where swap fees are not building up, you're more confident of getting to more trades as well, aren't you? So it's a double-edged sword. So I'm going to see how it goes. I'm going to trial this for 3 months. The real danger, I think, is the inability to get risk on. Yeah, I'm flat. If I can't get risk on, I can't make money. Yeah, the whole purpose of this job is to put risk into the market to generate income from risk. If you don't take trades because the swap fees don't allow it, there is a possibility I'll be sitting here in 3 weeks' time going, I hope there's a setup soon. And if that's the case, obviously, it needs to change. So it's all about adapting this job. You can't do the same thing over and over and over and over again. It doesn't work. Things change. Markets change. Costs of doing business change. So we will see. But at the moment, I'm short only on Euro New Zealand. So I'm looking for pullbacks. So again, this is one of the reasons I've relaxed the entry criteria a little. I've gone back down to 70-30 on the hourly time frame, because there's a hell of a lot more signals on the 70-30 on the hourly time frame. So I want to get in to more opportunities. Therefore, I'm going to have to relax my rules and get into a little bit more risky opportunities, because I'm only going to be getting into half of the opportunities potentially. But we'll wait and see. So as you can see with the Euro New Zealand, there's been plenty of short opportunities. We haven't had any longs apart from that one there. Yeah. So hopefully we'll pull back. And then obviously I'll be looking for that type of price action. Euro US, again, out of the Euro US last week, just before the election, timed that one perfectly. Well, I was a day early, but obviously that's collapsed quite dramatically. We've got a weak euro. We've had a lot of strength in the US, obviously, with the elections. But this one right down at the previous week's lows at the moment, and it looks like it's trying to break it. But if it doesn't, we'll be looking to come back up into that propulsion. And I reckon if we don't break this low this week, we'll probably just undo and we'll be back to where we started. So a little bit of a delayed reaction, but probably going to get back all the way up there, I reckon, if we don't get any more strength coming through on the US. So this week, obviously, it's all focused around Wednesday's CPI number. If that number comes out as weak, that euro US dollar is going to be back up at where we were prior to the elections within a couple of days. If these numbers come out as bounces, then we're going to get more strength on the US dollar potentially, which means obviously that will break to the downside. So we'll see what happens. But euro at the minute, very, very neutral, getting pushed around by the other currency, the cross. And obviously we know the US dollar was strong running into the elections. And then obviously they undid that before the elections hit, which is where I got out. And we now need to wait and see what happens with Trump. But there's a few orphans propulsion gaps here, look. So these are obviously large orders placed by the banks. That's the election. It may never get there. Yeah. So these big interest rate changes and things that we see where we get these big propulsion gaps that get orphaned, i.e. they don't turn grey, they don't get filled. You know, if this US dollar, then we now go into rally mode because the market's happy about Trump being in, we're never going to get back to these levels. Or we will probably at some point, but not for a long time. So we'll wait and see, but it's a lovely support area here. Yeah, it's an area that we've been interested in many times. There's another little area there, 150 ADR from where we are at the moment. So this is a good area for support historically, but you need to draw a line in the sand here because this is Biden, this is Trump. Totally different economic outlook. So everything changes from this point onwards. Yeah, we have no idea yet what the market's going to make of it. We have no idea yet what Trump is going to do. Yes, there's plans, but until he gets in January and until he starts saying in the run-up during November and December what he's going to do, we don't know which way anything is going to go. Everything is affected by the US dollar. Half the transactions in the world go through it. Yeah, so it's incredibly important that we pay attention to what the US dollar is doing. So at the minute, sitting around waiting for a signal. At the moment, I'm shorts only. Yeah, so looking for long US dollar movement personally, but I'm not in anything, so I will wait. I'm looking to try and get in on pullbacks. So any RSI extensions to the upside, I will be getting in short. Pound odd. The pound at the moment, very, 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 very sideways. We had the interest rate difference last week. So we dropped the rates down to 4.75. If you look at the history of the pound, we managed to get that 5.25 down to 5 with a lot of fighting. It was touch and go whether Bailey was even going to do that. And we've finally got this now. So what he was looking for was us to hit our inflation target of 2%. We did that, and then he went, nah, don't fancy it. And he didn't change the interest rates, which obviously weakened the pound. So we're now basically down to 4.75, but he's been very, very, very open with the fact that I'm not happy about going any further than this until I see that inflation continuously coming down. We've just had a big drop in inflation, which means we're likely to get a bounce. So there's very little chance of that dropping next month. It's going to take we need to watch the inflation figure for the pound. It's going to be very important this month. But it's very unlikely we're going to be coming down to these levels. This, I think, somewhere around about the 3 to 4% is going to become the new norm for these, for most of these pairs, I think, because it's more important than ever that inflation is kept under control. We've just got ourselves back to the norms from the pandemic. It's taken 4 years to get us back to where we are. God forbid we get another pandemic. But the norms is going to be higher interest rates moving forward, which is going to mean the cost of living is going to be difficult, which is going to make businesses struggle, which is going to make investment difficult. The budget we saw there last week, you can see the market's reaction to the budget. It didn't like it. They're stifling and strangling investment. Interest rates are remaining high. There seems to be much more likelihood that the pound will continue to weaken moving forward. So I'm looking for typically longs on it. This is the thing you're going to find with this. The more I've been looking into these swaps at the moment, the more I'm realizing how much correlation there is between swap fee and market direction. It's a little bit like the retail sentiment. Yeah, whatever the retail sentiment is, the market tends to go the other way, because that's nothing to do with anything but traders are idiots and they get it wrong because they see the market going up and go, oh, that's the top. It's not, it's going up. So this basically seems to correlate a lot with the potential direction of an instrument. This one particularly is a little bit more of an anomaly. This swap fee obviously will change if the Australians drop that interest rate, which there's a potential that they will do. But for me, I'm not really able to take shorts because it's just too expensive. So I'm looking for long opportunities. So I'm looking for the bounces basically as we come down. There's no reason that it should go parabolic. Yeah, we're not, and you can see here from the budget, when the budget was announced, we got that, and then we got pulled back, and then we came all the way back up there. Yeah, so it's coming down beautifully in market structure, which is the way it probably will continue to move. Yeah, and we will get pullbacks in longer term trends. So looking for long opportunities at the moment on the pound odd, but long term direction on this one should be really bearish. So we'll see. This is a great example. You know, this trade here took what, 1, 2, 3, 4 days to play out, but that's because we had the budget. Yeah. So any trade that I take against the swap direction that lasts a typical trade, which is somewhere between 2 to 4 trades in a position, typically you tend to be out of it within a week. It's not particularly expensive to hold something for a week. However, if it turns into one of those where you get in, then it sits around like that, and then it pushes up a bit, then it comes down a bit, and you've taken another one up there, it's not quite far enough for you to get out, and then we get a little grindy push to the upside. These are the ones that turn into 3 to 4 week holds. That's when that becomes unbearable and unprofitable. You can't go, oh, well, the last one worked. There's a 50-50 shot the next one will or won't work, isn't there? So I have to fall in line with this at the minute, and we'll see where it goes. But that's the direction I really want to trade. However, financially, that's the real direction I'm able to trade without hemorrhaging a ton of cash. And even this, although this is green here, swap long is good, it's still negative 460. So it's still costing me money to long this. I'm paying an overnight swap to long it. It's less than $5. I've just set it at $5 basically. I've set a swap fee of $5. You've got to set it somewhere. I chose 5. It's still going to cost me money, but it's not going to cost me ridiculous money. Yeah, that's what I'm interested in, controlling the ridiculous outgoings. Pound CAD, totally sideways at the minute. Yeah, any time frame you go and look at, this thing is very, very rangy. I'm happy to trade this in either direction. It's slow at the moment, but you know, it's moving nicely. So I don't care which way I trade at the moment. The EA at the moment is going to trade longs only. It's contracting at the minute up here. You can see there's been a fair amount of movement off the election, but not massive. So yeah, sideways. Rangy at the minute doesn't mean it's going to stay rangy, but watch these lows. Obviously, we know the market is buying this area. It is bullish at the minute. However, that could change very easily with what's happening with Trump at the moment. So at the minute, it looks like we are starting to want to break short. But, you know, you can see we've had reverse alert after reverse alert holding, which means if you get reverse alert after reverse alert, it means you're in a range, basically. So RSI extensions, very few. So I will be looking for longs down at these lows and hope that we hold these lows. If it doesn't, then I'll be trading it to about 200, 250 ADR with a couple of extra trades to get out of that, and when it comes to test that monthly low. So right now it's stuck right in the middle of nowhere. Don't trade from the middle of a range, wait for it to get to an extreme. But yeah, stuck. Pound Swiss and yen we've covered. Pound New Zealand. So this one basically sideways at the minute as well with a pound, but as you can see, we are starting to roll over. This area of support here, we need to see if this holds. So if it comes back down and retests this and breaks this, we'll be coming back down into the previous one, which is here. So you got a good couple of ADR drop to the downside. So I'm looking basically at the minute not to trade this because it's just too expensive. It doesn't matter which direction I get into this. It costs me like nearly $10 swaps. So I'm not trading pound New Zealand at the moment until this changes. And this is the beauty of using this dynamically. When the New Zealand interest rates and the pound interest rates change, one of those will turn green and I'll start trading it. But right now, it's too expensive for me to trade it. So you can trade it in either direction. It's just a case of waiting basically for a signal. So as you can see at the minute, last entry you had was up here. This thing's been totally sideways for the last 2 weeks. Not really had an opportunity to get into it. So flat as a pancake, not really anything you can do with it. That was the entry on the 4-hour RSI up there for shorts, which is the same as the hourly entry. But yeah, not really doing anything at the minute. This seems to be holding at the moment, but not convincingly. So I think there's a good chance that this will start to drop. I think this pound is going to weaken moving forward over the next couple of months. But just got to stay tuned to Bailey and wait and see what he says. He's speaking again on Thursday. At the minute, though, it's very much a case of we don't want to drop the interest rates any further, which isn't going to make it bullish or bearish, but the budget certainly means that it's going to stifle the economy, which means it's probably going to be bearish. But this will all come out. So the budget, when we got the budget, the market reacted negatively to it because it could see that it was small businesses that were going to pay. You put in your tax on national insurance contributions for business, means businesses have got less profit. Businesses with less profit employ less people, make less money. Your GDP drops. GDP dropping means your currency gets weaker. Yeah. So that's basically what the market is seeing at the moment. It's seeing interest rates aren't going to change. That's fine. Doesn't make you bullish or bearish. It's seeing inflation pretty much stagnant. Doesn't make you bullish or bearish, but they can see the economy is going to get strangled by what's happened in the budget, which does drop your GDP. So ever so slightly bearish stance. Pound US dollar, thoughts on euro pound? Already done that. Go and watch the replay. We're moving down. We've done the euros. Pound US dollar, very sideways. This is a rounding bottom. So as you can see, we are double bottomed, and potentially this week we've got the chance for this to push up. However, we're also bearish market structure. We've gone into a very much of a range here. Look, so this at the moment is stuck. I think you're going to find the US dollar probably, I might be wrong, we might get a massive movement on the US dollar. It depends what Trump says, doesn't it? But it's kind of bottoming out, which means I think there's probably the chance of a little bit of weakness coming on the US dollar, but we need to wait and see what the figures say this week. But yeah, sideways at the minute, not really any opportunity to do anything with it. Watch the range highs and range lows on it at the minute. So I'll be looking for shorts on this one. So pound, I can trade short with pound US dollar. So I'll be getting up into here, looking to short it. But really, it's kind of gone into a beautiful range for the last couple of weeks. So it's a case of, is it going to hold this range or not? So ADR hits to the upside, RSI extensions to the upside. We're looking for shorts if we can get any. But right now, we're kind of in the middle. So longs down here, shorts at highs. But long term, we don't know what we're doing because we don't know what Trump's up to. So we've got a low down here, which is 225 ADR. So there's potential for that movement to come in. So if we break that low, it'll be a long from there. Where can I find out the swap direction? The position trader EA displays it for you if you just use the input in there. But it's in your broker specification. So just go to your broker specification. It's there. So each instrument's got a, if you right click on it, you can't see what I'm doing, can you? Because that's not on the screen. There we go. So if you just right click on any instrument and go to specification, it brings up that window, and then that window, it tells you what the swap fees are, long and short. This is only relevant if you're position trading, yeah? So if you're taking position trades and you're not doing drawdown control quick on those trades, it affects you. That's how I trade, yeah? If you are position trading, or you're using the position trade EA, for example, or the market reverse alerts EA, for example, to position trade, but you are using drawdown control quick, i.e. you're saying if you get into a position and you get 3 trades on, shut the oldest one out. If it moves fast against you, you're not going to pay much swaps, are you? Because you're not holding those trades for a long period of time. It only affects long-term hold. Yeah, so swing trading is affected by it. Short-term intraday trading, forget the swaps, doesn't matter. If you hold it for 1 night or 2 nights, not really relevant. If you're holding it for weeks, it's incredibly important because it builds up. And like I said, it's not something I paid attention to in the past because interest rate differentials have been small. So only since I started looking at it in the last few weeks, I've realized how much money I've been spending on swaps in the last year. And it's unbelievable, the difference. When I look at what I was paying in swaps 3 years ago and what I'm paying in swaps now, yeah, it makes the difference between 5 figures a year in difference in profit. Big. Because the market is different now. But never paid any attention to it because we haven't been position trading through interest rate differentials this high. Now I am. Need to pay attention. But if you're trading any strategy that uses a stop loss, any strategy that gets out the next day or the day after that, any strategy where you get into a trade and you're cutting it quick, it's not going to affect you. Yeah, swaps on a Wednesday are 3 times. So yeah, but you can't say, oh, I'm going to have to shut everything on a Tuesday. Hold it until Wednesday. If it gets you out with 1% profit on Wednesday and you shut it on Tuesday because the swaps are 3x, that's ridiculous. Hold it, but don't hold it for months or weeks if there is a high swap. I have no problem, right, with an ADR reversal strategy, for example. The swaps long are bad on the pound US dollar for me. If we got an ADR hit to the downside here and I took a long on it and it pushed down and I took another long on it and then it pushed up and I got out tomorrow on it, I couldn't give a monkeys about the swaps. Doesn't affect me, does it? However, if my plan is to get in on an ADR reversal and hold it until I get an opportunity to get out of it, that time is unpredictable. It could be tomorrow, it could be the day after, it could be Friday, it could also be December the 31st. If it's December the 31st, it's going to cost me a lot of money. I can't control time. So it only applies the swap if you are swing trading or position trading. Yeah. So we are holding long term as position traders. So these are the strategies that I'm running at the moment. So the trend pullback strategy, swaps are relevant. The lazy trader strategy that we've been developing in the member streams, it's irrelevant. Doesn't matter because we're out very quick most of the time. And we have systems in place that says, get me out if the trade isn't playing out. Yeah. The strategy that we're trying for one of the members, which is, well, I'm live trading it for one of the members, is getting in at 9 o'clock at night and getting out 2 hours later. Doesn't matter. Well, it does matter actually because we're paying a swap fee, but we're not holding it for more than a couple of hours. So we're not holding it for more than a couple of days. Therefore, the swaps are just going to be what they are. Wednesdays, that strategy is going to pay more than it does on a Monday and a Tuesday. Can't do anything about that because the swaps are bigger. We could say don't trade on a Wednesday, but you know, it's just you can take it to extremes. People worry too much about everything. This thing here is totally random and will do what the hell it likes. It moves up, it moves down, and it moves through time. Those are the 3 constants of trading. This you can't control. You can control that. I can control the direction I trade in. I can't control how long I'm in my trades for. So I have to pay attention to the thing that costs me the money for the time. Yeah, that's all I'm doing is tweaking my strategy basically to make it cheaper to run the business. Basically, at the end of the day, that's what it is. Swaps don't change very frequently. No, they're interest rate differentials. So if the interest rates don't change, the swaps don't change. They will, but marginally. Yeah. It's the overnight rate. It's the interest rate they are being charged. When you take a trade, your broker takes a loan out against your trade. Your broker pays an interest rate on the loan. Yeah. And then they put a commission on the interest rate. That's what that is. It's an interest rate. So interest rate differentials, right? So this is why if you look at the US dollar yen, where did we get to? We're up to the pound US dollar. So we've done all the pounds basically. Yeah. So the US dollar yen, the swap fee to go short on the US dollar yen is $30. The swap fee to go long is negative 30. It costs 30. It's plus 9.55 if I take a long trade, because the interest rates are 4.75 for the US dollar and 0.25 for the yen. Therefore, the interest rate differential is 4.5. You are paying this. The bigger this is, the bigger the swap fee will be. Yeah. It varies. Every broker is a different number. It depends on your base currency. If you're trading a US dollar account or a euro account or a pound account, the swap fees will be different because you're borrowing different money in different currencies. There's a lot of calculations that go into it. But at the end of the day, if it costs you a shed load to do one thing and it doesn't cost you a shed load to do another, do the other. That's all it is. It's very, very simple. This is why I've kind of boiled it down to good and bad. Yeah? Shall I or not? No, it's too expensive. The US dollar yen trade that I took back here. Yeah, where I got out here eventually. Yeah. That trade cost me more than $5,000 just to trade it. Just to trade it. If I'd have longed it and held it for the same amount of time, they would have paid me $5,000. Yeah, I'd rather be paid $5,000 than have to pay $5,000 just to do the thing that I do every day, which is press a button long or short. Yeah, the short button costs me 30 and the long button makes me 9. I'm pressing the long button. I'm not going to press the short one. That's it. It's as simple as that. But it's only relevant when the interest rate differential is so high. If the Japanese put their interest rates up to 4.25% and the US stay at 4.75%, I can trade it any direction I like, because it'll actually probably be profitable for me to press the short button and the long button. They'll pay me money both ways. But at the moment, they're not. So you just need to look at what your broker is. But this is what all this data from the Position Trader EA is just pulled from the system. So that displays what your broker's charging you. So, and they don't change frequently enough for you to worry about it. So, have you ever tested a strategy with an entry at monthly or weekly highs and lows? Yeah. Support and resistance. I have, yeah. But the strategy is you get in at the weekly and monthly highs and lows. How do you get out? Getting in has got nothing to do with making money, has it? So I can get in at the weekly high, but how do I get out? That's the money. Are you position trading it? Are you stop loss trading it? Are you using a timed exit? There's a million things. There's a million things. We can do that. I'll put that down in the member stream. We'll do that. We'll build one. We'll test it. But you know, I mean, it doesn't matter how you get in. If you get in at a monthly high or low, so let's say you take a trade at this weekly low here and weekly high here. So this week, when we get there, you press the sell button. How do you press the sell button? On a bearish engulfing, on a hammer, a shooting star, a limit order? Do you press it when you get a reversal alert? Do you press it after it's pushed above it and come back down below it? Does the candle need to be a specific size? You can put as many complications as you like into it to get in. None of that is going to make you any money. When you press the low, how do you get out? That's where the profit comes. Because if that thing gets to that high and then goes like that, and then like that, one person will make money, another person will lose money, because the person that had a trailing stop on the weekly high bounce got out with a profit, Or the person that had a stop loss risk reward ratio of 2 got out with a profit. The person that didn't put a stop loss on it and just waited for a 4-day exit made a loss. However, the next time that happens, the guy with a 4-day exit would have made 10R. The guy that got in there with a 2R target only made 2R. The entry at the high has absolutely nothing to do with profit. The exit strategy is how you make money in the market, which is why everybody's constantly hopping systems, focusing on, hey, look at this strategy. It gets in on this indicator, that indicator. The getting in is what you focus on. Opposite of what you do. You focus on the getting out. That's how you make money. I can flip a coin right now and make money. If I don't use a stop loss, I will guarantee you I will get out of that trade profitably, 100%. Because all I'll do is I'll wait for the market to come back in my direction. Profitable strategy. Has it got anything to do with the reason I pressed the button? No. You know, so this is the thing with strategy development, is everybody's focusing on, have I tried? Have I tried? I've tried everything. I've been doing this for 17 years. It's a buy and a sell. Whether you do it here because of the monthly high, here because of the weekly high, here because it's hit ADR, or whether you do it right now because your cat sneezed, doesn't make any difference. What are you going to do when you get in? That's what you need to focus on. I can build EAs. I could build an EA to, I've got an EA that does this. I've got many EAs that trade monthly and weekly levels. I can make them all profitable, because all I do is I'll select the inputs that made it profitable. And I'll go, there you go, there's a strategy that works. You'll trade it and it will fail. Why will it fail? Because it's based on what the market's done in the past. It's got nothing to do with what the market's going to do next week at all, has it? So I can trade, we can do that. We can certainly build one of those. Barry Man, come in the member streams, we'll do it. I will put it on my list. I've had one prop firm that charged me negative swaps in both directions on everything. Yeah. Of course they do. Because they want your money. Prop. Yeah, I mean, this is the thing. Go and check. Check the swap fees. You know, it's the same with commission. There's a lot of these prop firms that have these conditions when you're doing evaluations. It's like, no commission, tight spreads, guaranteed 0.5 spread on everything, no commissions, no swap fees, da 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 da. Here's your funded account. Oh, by the way, the swap is $25 long and short. The commission is $5 round trip, and your spreads are now 1.5. But that's not what I had in my evaluation. No, but this is real trading conditions. When are people going to realize they're in binary options 2.0? Is there a way to backtest that? Yep. I can. Well, it's only with an EA, yeah. Yeah, you can backtest anything, Barrier Man. Of course you can. If you want to trade it, I mean, use the position trader EA in the tester. Best way to trade it is just going to turn off everything basically, and just have a risk set up. Don't have any targets. Turn all your targets off. Oh. And literally just use the buttons in the tester and wait for the market to get to a support resistance area, and then just trade. You can backtest all of this very easily. Look. Why did I pick the one instrument it hasn't got data on? Just loading data. While we're waiting for the data to load, we got to the pounds, didn't we? New Zealand. There you go. There's that support resistance area that I put in on the euro pound. Just happens to share the same price as the New Zealand dollar CAD. Oh, God. Oh, it's broken down nicely. Look. So yeah, New Zealand dollar CAD. Oh, it's trading now. Why are the buttons not there? It's because I selected that one. So yeah, so in the tester, best way to do this, use the position trader EA. Yeah. And basically just scroll out, zoom out. We need to wait for some data to come in. But there's no data. I can't actually do this because I haven't got any data available. I'm going back way too far, back into 2016. Look. But wait for it to get to a monthly support resistance level. And just mark it up as you go. Look. So sit there and wait for, so that's a monthly low. I don't know if it is or not, but wait for it to get there and then sell it. Right, but I've sold it. This is not making money. The market is moving against me. So what am I going to do now? Am I going to position trade this? Am I using a stop loss? Where am I getting out to the downside? That's where the money is made. I've sold it at an area of resistance. Okay. Profitable monthly support bounce. That was resistance bounce. Well, that's a monthly support. I've used it as resistance. Profit. Job done. Easy, isn't it? Just do that. Test it yourself. It's very easy to test monthly levels. So that's now last week's high. I'll sell it again. Last week's high. Very late entry. So if it gets there, I'll sell it again. Because I caught the entry up. Could be taking profit, couldn't I? Oh, missed it. Sell it again. Oh, it's late again. Never mind. Let's just close it out in profit. Profit. Yeah. I sold the monthly high, low. It turned into a weekly high. So I sold it again. And I made money on it twice. Now, the guy that didn't get out there is still in that trade right now. He's still in it. Now he's in drawdown. What's he doing? Is he closing out his trade there? Is he position trading this, taking another entry and waiting for it to move back down to here to take the profit off? In which case, maybe you will be successful, maybe you won't. It's taken a while to go through, isn't it? No, he's not. So he's going to have to turn it into a position trade. So I'll probably sell it again up there if I was him. Just use the buttons. Oh, he's out. There you go, I'm out. Because I got in, got out. Tick. People don't realize, you know, it's making money is not about developing a strategy that has the best entry criteria, because every single monthly, weekly resistance or whatever, supply, demand, RSI extension, whatever it is that you're using to take your trade, it has nothing to do with making money. Because when it gets to that level that is whatever it is, there is a 50-50 probability of it either breaking that level or reversing from that level. The money is made in trying to identify how often it pulls back that far, and that far. So let's say, for example, 60% of the time, when you get to a weekly resistance, it bounces. That in itself is an edge. But the edge is there only if you have a 1-to-1 risk-reward ratio of a stop loss of X distance and a TP of X distance equal to the stop distance. You then have profit. You will make an edge of 10%. If you target 2R on that, your strike rate of that edge will drop down to something like 45%. But because you've got a 2R target and a 1R loss, that is still a profitable edge. But it's the same strategy. The entry is literally a level, a line that you've drawn on the chart. But it doesn't make money. The exit is making you the money, because the exit is what creates the edge. You know, people always look for, I get asked all the time, and the biggest question I get asked, and I still do to this day, I built this indicator 4 years ago. I still get asked to this day, what's the strike rate of your indicator? I don't know. How could I know that? Indicators don't have a strike rate. The strike rate is 100% because what happens is when it breaks that low, it automatically draws an orange box 100% of the time. What's the strike rate of it? I don't know. What are you doing? Are you getting in there and are you targeting 10 pips with a stop loss of 500 pips? The strike rate's 99%. But when you get stopped out that one time at 500 pips, you're going to lose every piece of profit you've made. But the strike rate's 99%. Has that got anything to do with making money? No, of course it hasn't. So I'm not having a go at you, Barry, man. I'm just explaining how the profits, how the money's made. But yeah, I have tested lots of support resistance, monthly, weekly bounces. But the trouble with it is the definition of the entry is incredibly difficult to fine tune. That is a weekly resistance bounce of that. That is a weekly resistance bounce of that. But whether you give a wiggle room of that much around resistance and support is a variable. Yeah. So if you want it to hit that and you have a pending order exactly at that level, whether or not the trade works out will depend how far beyond that level it goes. And if it doesn't get there, some people may say, well, that was a lovely resistance bounce, but it only got to there. You might class a resistance bounce of having to hit that level. There's a million variables, but all of them work and all of them don't. Sometimes, you know, it's just one of those things, isn't it? But I'll build an EA for it, and I can do some testing in the members group because it's a very good, you know, I go on about it all the time. The reason I've got these lines drawn on my chart is because price respects them. Yeah, that low there got respected. It got respected there. It got respected there. Yeah, this low here, not so much. But if we get back to it, it might well respect it again. The weekly high here was respected. You know, it does respect weekly highs and lows. And the reason is all investment houses and large banks that are using long-term trades will place orders at these levels. So the reason support resistance works is nothing to do with the fact that there's a line drawn on the chart. It's the fact that there's a whacking great bunch of limit orders set there by banks. Yeah, you can't get through that level because they've put 100 million orders there. Yeah, you can chuck 50 million orders at it until, you know, keep chucking money at it as much as you like. But if their pockets are bigger than your pockets, that thing's doing nothing but bouncing at that level. That's why it works. If they want the market long and the market tries to go short, they will make the market long. That's why support resistance at weekly level bounces work, because banks and institutions use daily and weekly charts, or daily and weekly price levels, I should say, not charts. They use levels, price points to trade from. That's why it works. Sometimes it will overshoot, but to get through that level, think about support and resistance, what's happening there. Bank's got $100 million long. Yeah. You come in with 50 million short, you can't get through. You come in with another 50 million short, you can't get through. These guys have now got none left because those 250 millions have taken their 100 million. So the next 50 million that comes through breaks the level. However, it's cost 150 million to get through that short. The shorts will run out of money. Therefore, the buyers come back in and push them back again. They can't carry on fighting because they've shot all their ammo. All ammo is money. That's why you overshoot levels and pulls back. The ICT traders out there that will tell you there's a stop run. It's not a stop run. It's just price movement. Market going up and down. That's what it does. There's no stops taken out. There's no stops there. Banks don't use them. Morning, Neo. Hope some of you got some election day ridiculous gains. I didn't. I wasn't trading. Said the man with the big cool aid grin. Franco made some money then. If you traded it, there's a high probability of making money. If you look at what the US dollar did, yeah, it's very hard not to make money, isn't it? If you shorted it, you made money. If you longed it and you scaled into a trade, you made money. If, as it was going up, you tried to mean revert it, you made money. Yeah. The only people that didn't make money during the election were the breakout traders who got stuffed twice. but everybody else made money. If you were trading, if you pressed the button, if you basically flipped a coin 3 times over that election period last week from Wednesday to Friday, and you press the button and then you waited for it to come into profit, you made money. It's very hard not to make money. I tell you how you could have lost money though. If you used a stop loss, then you would have lost money. But other than that, it's very hard not to make money, wasn't it? Unless you're still in the run up on the election. Yeah. Well, that's a different trade, isn't it? That's nothing to do with the election. But yeah, it was a busy period. But we were talking about this earlier, Franco. We ain't gone anywhere. We're still back where we started. Before the election, we were here. After the election, we're here. The only thing really that hasn't recovered is the euro US dollar. That didn't get back to origin. Virtually everything else just recovered, didn't it? Right, New Zealand dollar CAD. So New Zealand dollar neutral. Sorry, went off on a tangent then, didn't we? New Zealand dollar is neutral. Canadian dollar is being pushed around with the US at the moment, but again, neither of them really going anywhere. Both commodity pairs, nicely range bound. We've got kind of an expanding wedge going on now after the election on a number of different instruments. So where this goes, nobody knows. But at the moment, just back to normal RSI extensions on it. As you can see with the RSI, the 80-20 level on the hourly on the RSI hasn't been hit for a while. This is going back to September, beginning of September. We haven't had an RSI extension on this. The moves have been very, very orderly, so quite hard to get into. This will move obviously wherever the US dollar goes and moves the CAD basically. So at the minute, we're kind of just sitting around flip-flopping at the moment, waiting to see what the aftermath of the election is. So at the moment, I'm looking for longs, not shorts. However, that's very close. 590. I'd be happy to trade this in either direction, to be honest. So again, that might be one where I just say, do you know what? Screw it. Let's go. I'll stick the EA on it and I'll go -6. Yeah, and all of a sudden, I'll be able to trade the New Zealand dollar CAD in both directions because it's 90 cents. Yeah, you've got to use common sense. I've set 5 because I needed a number, but 6 maybe. But there's no real directional bias on this thing anyway at the moment. So you can kind of take trades in any direction on it. 590. That's because that's the cost of that one that I'm looking at. So yeah, trade that in either direction at the moment, I think. New Zealand US, I'm out of at the minute. Flat. But again, as you can see, all we did last week was whipsaw, and we're back to where we were prior to the election week. So business as usual, reset. You kind of got to look at this. Think of last week as a hard reset in the market. We basically were doing something, forecasting and hoping for something. We got whatever we wanted, which was something we wanted or something we didn't want. Now we've got new people coming into charge. We've reset. So this is kind of the market's reset button. We're either going to go off in that direction or that direction now. Every single RSI is flat. Yeah, RSI dashboard is reset. Oh, got one. Euro pound. So everything apart from the euro pound is reset. So it's just a case now of waiting to see what happens next. With the New Zealand dollar, US dollar, we've got these lows coming up, which is a lovely little support area around about 200 ADR. So if we get pushed down into there, we're likely to find the market buys it because it's done that 3, 4, 5 times in the past. However, when we get there this time, we've got a different government. Yeah. So again, everything's different. Technical analysis is great when the technicals are the same, when the fundamentals are the same. The fundamentals at this point here were wanting to long the New Zealand and make the US weak. The fundamentals here were wanting to do the same. When we get back here, if the fundamentals are now US dollar strength, we're just going to blow through that level. Yes, it's a line on a chart, but the odds are the same, 50-50. When you get to that level, what the market weight of orders is when you get there is going to determine whether or not we break that level. So scrolling out on this, This is an incredibly strong area of support historically. Yeah. So if that holds again, highly likely we're going to come back up to there over the next 2, 3, 4 months. So good levels of support coming up at the moment on that one, but right now it's just sitting around flip-flopping, waiting to do something. US dollar CAD we've obviously covered. Again, we've reset. We're back up to where we were. So this was the gap down on Monday last week. This is where the market heard that Kamala Harris was potentially taking, was it Iowa or somewhere? The opinion was that she's doing way better than expected. So the market was expecting a Kamala win, weakness US. So we got that gap down, and then obviously it flew down for 2 days, and then Mr. Trump got in. So we are now back to where we were prior to that. So again, whipsaw, reset, now where? Yeah. So right now we're just sitting in the middle doing nothing. I'm looking for longs. US dollar Swiss, and yeah, we've covered. Gold obviously had big moves. Gold is a US dollar cross. The US dollar rallied, therefore gold dropped. We'll have to wait and see what happens with that. But gold, look at the swaps on gold, yeah? Long in gold cost 29. Short in gold cost 3. Short. Franco made all his money on US 30. Nice one. Oh, that's a point. I've been waffling on. I haven't been paying any attention to my trades this morning. No trades on the FTSE. Opening range was too big today. 27-point opening range. 20 is 20% of ADR, so that's too big. DAX, I am long in £400 profit. Propulsion gap holding. Again, what we were just discussing about limit orders, bank orders, yeah. This is a large propulsion move at the open by the banks and institutions. They are long, therefore they are adding more volume to their long. That's their long, that's the add. Yeah. However, there is a strong weight of orders at the moment. To the downside, they're not actually able to get any traction. So if that breaks, we'll come back down and we'll retest probably that area there. So long at the minute, I've got break even stop running. So I'm trailing 2R. So either we're going to hit TP1, which is just shy of the monthly level there. It's quite an old monthly level now, that. Yeah, I mean, it's been invalidated loads of times, isn't it? So it's not very strong, that level. That is the strong area. So weekly high, monthly high, weekly high. Yeah, so it's that area, 150 ADR, highly likely to get a bounce. That's the other thing about support and resistance, Barrier Man. Yeah, when I was doing, I built an EA. Let me see if I've got it. What would I have called it? Oh no, it's not in here. That's the wrong one. No, I haven't got it in here. So one of the other things about support and resistance bounces, yeah, is the multi-test theory. So when you have a support and resistance area, so gold, great example. Yeah. That is the old monthly high. That's an old weekly level from here. Yeah. It's already been tested. Look, so there's your weekly level. There's the bounce. Anybody that bought the weekly support has made money if they had a small TP. If they didn't have a small TP, they lost money. Yeah. So exactly the same trader takes a trade here with a target here and he loses. Another trader takes a trade here and his target is here and he wins. Yeah. Nothing to do with the entry. It's the exit that made them the money and it's the exit that lost them the money. Yeah. So that support has now turned resistance. So the short players here have made money on the support bounce, stroke resistance. So turncoat, gone back the other way. So when we get back here, we've made money on that. Do you take another trade? Yeah. All the theories about support and resistance losing its power the more it gets tested and more likelihood to break is another thing that you need to factor into any back testing that you're doing. So for me, there's a monthly level there. Where's the other monthly level that goes with that monthly level? There. Yeah. So we got this monthly low. Yeah. And high. So far this month, we haven't tested these levels. So when you're building a strategy or building an EA, specifically in my case, to test a strategy, what do I say? When we get there, trade it. But if that trade works or doesn't work, whatever the outcome of that particular entry that I take at that point, do I then leave this in play? Or do I go, we've traded it, it did or it didn't? So you're only ever going to get one trade a month. Or do you continuously play this level? If it comes and tests it again, do you go again? Do you go again? Yeah. Again, all these things that when you're doing any kind of strategy development or any kind of EA testing, these are all variables. Do you use support resistance once? Do you use it twice? If it hits it 3 times, it's probably going to break it. Some people think it breaks it more 4 times. All this can be tested, but what you will find is sometimes once works, sometimes twice works, sometimes 3 times work, and it all depends on the volume of orders sitting at the level. If there's 100 million there and they lose 50, it will break the 3rd time because there's no more money there. If there's 200 million sitting there, it'll bounce 4 times, and then if it goes away and never comes back, they held. But the next time it gets there, there's 50 million there, and they come at it with 100 million and blow straight through it. The odds of it doing that and that are always 50-50. Nothing more, nothing less. It's a binary game. It goes up, it goes down. It will go up and then go down. That is a profitable trade to one trader, a losing trade to another. But it's nothing to do with that. It's to do with the distance it moves when you get in and whether you are still in it when it turns around and flies back the opposite direction. So how many times do you use monthly and weekly support resistance levels? All stuff that you can test, but you're going to get a different result every instrument you test. And every time period you test, you're going to get a different result because it's never going to bounce the same number of times with the same distance from the bounce because it's random. The price action at every time you achieve a level is different because the volume of orders long and short at each of these levels is different. Yeah, you're not going to have exactly the same amount of volume there when we get there next time as you did there. So therefore the price action there is not going to be the same here. Doesn't make any difference, does it? This is why it's so hard to develop strategies, because you get something, you look at it and you go, wow, that works really well. And then you pick a different time, a different couple of months, a different couple of years, and you test it again, and it's utterly useless because it's a 50-50 random shot as to whether the same thing will happen again, and it won't happen again. Nothing ever happens the same. Flip a coin 10 times, then reset it. Flip a coin 10 times. You won't get the same order of heads or tails. After every Trump state win, I added to position, waiting to see the next week's volatility pick up. Money on the sidelines, coming back into the game. Yeah, don't know what's going to happen next week. This week is just a mystery. Very, 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 very much mystery this week. What is going to happen with Trump and the US dollar? Nobody knows. Unless you've got a DeLorean, I'm all ears. If you've got a DeLorean, I'm all ears. If you haven't got a DeLorean, your guess is as good as mine. If you look at the last time Trump got in 2016, oh, got to go back in further, look. Where are we? There he is. So that is the 2 months after the election last time. You see this big spike here is the election, look. But then, so this is obviously the euro US dollar. So strength in the US dollar, weakness in the US dollar. And then we got COVID. Yeah. The market basically, when COVID hit, was back to the same level. So, Trump is good for the economy. Yeah. But the economy isn't the only thing that drives the US dollar. And don't forget, everything is a cross. So you can have one country doing well and another country doing well. Doesn't mean the US dollar is going to be the winner. Normally it does, but so it's very difficult to tell what we're going to see happening moving forward. Very, very difficult. But what we do know is, for sure, it's going to go up and down. And as long as it goes up and down fairly orderly, we can extract money from it. So hopefully it doesn't go. All I want is the market not to go parabolic. If the market doesn't go parabolic, I will make money. That's basically it. It's all we're interested in. I got Tesla shares and that worked out okay. Tesla did it. Yeah, I mean, that's the other thing you got to bear in mind now as well with what's going on. Elon Musk now becoming very heavily involved in politics, isn't he? He's almost like Trump's right-hand man at the moment. He was Russia and Trump and Putin having a chat. Elon Musk's getting involved in everything. He's getting involved in that. He's getting involved in what goes on here. So the stock prices of Tesla are probably going to be affected by what decisions Elon makes now within government, basically. So it's going to be a very interesting 4 years, I think, for a lot of reasons. But we play it day by day. Yeah, you can judge and guess as much as you like which way markets are going to go. But at the end of the day, when you press the button, it will either go your way or it won't go your way. And if it's going to continue, if the US dollar, the pound US dollar, if we look at it on a daily, right, if the pound US dollar over the next 12 months is going to do that, yeah, as long as it does that on its way, I couldn't give a monkey's. Because every time it does that, if I'm trading the other way, I will make money. And if I'm trading that way, I will make money. As long as it moves up and down, I don't care which way it goes. It doesn't affect me in any shape or form. If it goes parabolic like that, that's a problem. But that's COVID. So it's not likely to do that, is it? But yeah, we'll see. We will see. But, look at it on a daily basis. Yeah. I mean, this is the thing with trading, isn't it? If you're shorting the market constantly while it's going up, you wait for it to go down. If you're long in the market as it's going down, you wait for it to go up. Yeah. Doesn't matter if it comes and tests that level or that level. As long as it does that on the way and it bounces, that's all we're interested in, isn't it? So take it day by day, enter based on the rules of the system strategy that you're using. Wait for the market to prove you right. But yeah, Tesla. I'm not sure about owning Tesla stock at the moment. There's a lot of electric cars coming out now. A lot that are better quality and cheaper, or as cheap as Teslas. BYD, China. I mean, they're coming into the market strong in the UK. Very strong. All over the TV adverts. I'm seeing them flying around now, BYDs. They look good, They're cheap. Yes, they're probably spying on you inside the car, but hey, it's China. We've all got phones. Since now trading longer time frames, I'm doing much better. Yeah, you will be. Trump tariffs on Chinese cars. Yep. But again, not necessarily good, is it? This is the thing you need to think. Remember when you tax or put tariffs on stuff, there's two things going to happen. the people you put the tariffs on. So, for example, with Europe at the moment, Trump's thinking of starting a trade war with Europe, sticking a load of tariffs on everything that comes in. Europe's got an option. All right, we won't bother supplying it to you. What's the US going to do then? Go, but I want all my European stuff. That's not going to be good for the economy, putting a load of tariffs on. If the euro turns around and goes, all right, we'll pay you extra, it's good. But every single thing has got a binary outcome. It will either be good or it will be bad. Yeah. So if BYD cannot import a load of cars because the tariffs got up too much, there'll be more sales of Teslas. Does that affect the US economy? No, it affects Tesla's share price. Yeah. And that's one of the reasons I think Mr. Musk is getting involved, isn't he? Hey, Trump, I will back you all the way. Just don't let those Chinese cars into America. But it's not necessarily going to affect the US dollar. So from a forex perspective, doesn't matter, does it? Tesla is the most American-made car in America. I know, it's bizarre, isn't it? But the other thing that you got to remember about Teslas is they use a lot of gold in their manufacture, and Russia's got half of that, and Russia's got trade import-export bans on at the moment. So one of the things that Trump can do is release the supply of gold. He can change the supply-demand structure of gold by lifting embargoes on Russian gold export, which will help Elon make his cars and electronic components. So if the export restrictions on gold are lifted with the US and Russia, all that flow of gold goes out of Russia because it can't go anywhere else into the US. US has an extra supply available in gold, and China need it for manufacturing electronic components. So tariffs on gold, export will go up. Yeah, there's a thousand million things that can happen. Yeah, and that's what running a country is all about, is looking at how you make money. It's a business at the end of the day, and that's why Trump is good at it, because he's a businessman. Whether he does it right or not, and for the right reasons, it doesn't matter, does it? As long as it goes up and down, I don't care. I just don't want the market to flatline, and I don't want it to go parabolic. I just want it to move. That's all I need. Honestly, China's most favourite nation status should be revised. China's most favourite nation status? Yeah, I don't know. I think there's an awful lot of weird things are going to happen in the next few years. Tesla is still the best-selling EV in China. Is it really? Better than BYD? Yeah, I mean, Tesla's everywhere, isn't he? So, you know, who knows? Got a new SpaceX launch in 10 days' time. We'll see what happens with that. If that doesn't blow up, I'm going to be buying SpaceX stock because he's going to start selling bits of the moon and then bits of Mars. It's all going to change. I'll be long gone by then, hopefully. Right. I'll leave it there today. So tomorrow, basically, if you're coming into the member streams tomorrow, we are going to be looking at daily trading strategies. We've already got a couple we've looked at, which are pretty good, which obviously are now live testing. And yeah, we'll have a look at some more. Just seeing if my DAX is actually going to pan out. Seems to be a bit stuck, this DAX. Really low volume today after the initial opening range. So I'm toying with the idea of just taking the 500 today. In fact, I might just take half. It's going to take half. So I've taken half, and second TP is at the monthly highs. But it's not a very good level, is it? So, but yeah. I just want to get some money back, basically. So yeah, so tomorrow we're going to look at some more daily strategies. And we're just going to test some entry and exit strategies with daily timeframes, basically, which obviously are very reliable because we are ironing out all the crap and the chop intraday, and we're just literally taking whether it's bullish or bearish. So going to be looking at some of those. I've also got another test I want to run on higher. So it's another daily strategy, which we'll cover tomorrow. I might cover this one tomorrow. I might do it another day, but Basically 3-bar reversals at high, low of day. So I've done a little bit of testing on this already. Works incredibly well. So all we're doing is we're monitoring hourly time frames, waiting for 3-bar reversals, and we're taking 1 trade a day. We exit end of day based on that 3-bar reversal. So if we get the high of the day or the low of the day, it works. If we don't, we lose. Simple as that. It works more than it doesn't. So there's an edge in the 3-bar reversal pattern that we looked at. So there's quite a few of these types of daily strategies that I can cover, and it's about trying to build up that portfolio of dailies to give us that variation. So just finding lots of edges, and there are so many more edges on daily time frames than there are intraday, because intraday is chop and daily is more directional. So going to be focusing quite a lot on that in the members streams moving forward. So I will see you tomorrow if you're coming into the member streams. And we'll have our first trades on the new strategies triggered tomorrow. So the 3 strategies that I've set up based on what we've covered so far in the strategy development for the pullback, the lazy trader, and the scalping strategy. I don't know what to call it. I kind of want to call it the swap scalping strategy, because basically you're taking a trade, immediately paying a swap on it, and then trying to take a tiny little profit, which is why I don't think it's going to work. But we'll test it and see if it does. But anyway, the back test is unbelievable, isn't it? So yeah, that one's live as well. So we'll see what happens with those. But it's about trying to build a bigger portfolio of that type of trading to get this diversity in, because it's going to be a crazy few years ahead, I think, with Mr. Trump. Anyway, so I'll be back tomorrow in the member streams. If you're not coming into the member streams, I'm back on Wednesday, but Wednesday is an afternoon session for the US. So we're 2:30 on Wednesday, and then the next free stream after that is Friday, 8 a.m. Okay, so have a good day if I don't speak to you in Discord. Other than that, I will see you next stream. Have a good one.